As I finish getting set up here. Alrighty. Hello and welcome to my final presentation for Accounting 2. For this company financial analysis, I chose to focus on Carnival Corporation and PLC because they own my favorite cruise ship company, Holland America. All right. As I alluded to, Carnival Corporation is a company that is in the cruise business. Founded in 1972, they now own 8 cruise ship brand lines and over 90 cruise ships where they provide different lengths of cruises to various destinations at different levels of luxury to fit both the budgets and travel needs of millions of guests every year. While headquartered in Miami, they have employees worldwide. Next, I have a screenshot of what CCL's stock looked like after market close on July 30th of this year, as well as the one-year trend graph of their market stock value. Their stock appears to be quite variable, but on the rise. Today, we will go a bit more in depth. Up first, I have the balance sheet. At a surface level glance at this horizontal analysis, we can see that while current assets drop by over 30%, total assets overall decrease by less than 0.5%. To understand what is happening, we can see that over 10% of those current assets were reinvested into PP&E and long-term investments. For the remainder 20% or so, we can track down to the total liabilities and see that those decreased by about 20%. So we could infer that the last fiscal year for Carnival Corporation, that they may have decided to use a portion of their current assets to pay off some of their liabilities. If we wanted to look at this balance sheet from a different lens, we can view the same information with a vertical analysis to view what percentage of each category contributes to the whole for its respective year. We then can confirm that the current assets decrease, the PP&E increases, and specifically long-term debt decreases. In addition, we get some more information on stockholders' equity that puts values into context a bit better than with the horizontal analysis. We can see our retained earnings, treasury stock, and stockholders' equity all go up significant amounts, which is great news for the company and its investors. Up next is our income statement analysis. Starting out with the horizontal view, we can see our sales have increased significantly, resulting in a vast turnaround of net income after taking a loss the prior year in 2023. Even though the cost of revenue and operating increased, the increase in sales was able to turn the trajectory of the prior year to a better destination. Now, as we look at the vertical analysis of the income statement, we can get further clarity. Even though the monetary value of revenue costs increased, the percentage of profits they reduced actually decreased, signaling increased efficiency in operations. We can also view net income in a more grounded way, seeing it as just over 7.5% of revenue rather than a 2,600% increase on the horizontal analysis. All right. For the second portion of the mini analysis here today, I've prepared accounting ratios on liquidity, solvency, and profitability to put more of our financial data into context. If you are a short-term creditor, you may be pleased to hear that I'm starting with liquidity. We can see that Carnival Corporation's reported working level has decreased just working capital has decreased just over $2 million, which could be discouraging as it looks like they may be short on paying their current portion of liabilities for the fiscal year. We can then see minor decreases in both the current and quick ratios, which would signal Carnival may have some strain in ability to instantly pay debt if it is called up. We then turn our gaze towards accounts receivable turnover, which looks like it may be a significant decrease. But if I do some quick mental math here, Both numbers divided into 365 days in a year would suggest turnover occurs about every 8 days, which should be our day sales in receivables. On the next slide here, we finish up our liquidity analysis and we can see that receivables do indeed take about 8 days to turn over with no significant changes in inventory turnover or days spent in inventory either. Next up, I've prepared some solvency measures. Regarding our solvency figures, we see favorable figures all around, which makes sense as we remember back to our balance sheet analysis where we determined the company utilized some of its current cash to pay off long-term debt. They now have a better they have a better ratio of long-term assets to counter their long-term debt, a greater amount of equity to counterbalance some of those liabilities, although ideally we would be closer to zero. And finally, and maybe most importantly, we see our times interest earned ratio, which would indicate Carnival is feeling almost twice as comfortable as last year in making their interest payments, which should be great news to creditors. To finish up today's analysis, we can take a look at the profitability measures. These figures are great, especially great news to investors who had a rough 2023 in the market. We can see the company is increasing their effective use of assets as well as its profitability of the assets themselves. In turn, this also resulted in increased profitability for stockholders' investments as a whole. Turning to the next slide here, we can see the current reported earnings per share of the company was reported at 1.91, which is a major turnaround for the company after it had a reported figure of -5 back in 2022 as it was coming out of the pandemic. We can then see the price to earnings ratio at 15.8, which is a fantastic figure compared to the 2022 figure of under -1. This may be encouraging to shareholders as it may signal increased growth potential for Carnival Corporation on the horizon. For today's presentation, I was unable to calculate specific figures regarding stock dividend returns, dividends per share, and dividend yields due to dividend information being held behind a paywall on Yahoo Finance. To summarize today's information, we can see Carnival Corporation as a whole drastically improved the financial standing of its company within the fiscal year from 2023 to 2024, which is encouraging to shareholders who may have had their stock during the pandemic and had it drop, and it's now raising again. And it should also be encouraging to credit lenders knowing that Carnival can make their payments. Regarding current investing, personally, I would probably hold off until the next seasonal collapse of the stock, as it looks like it has a yearly cyclical rise and fall if one were to look at the 5 and 10-year charts. I would buy when the stock is low and cash out at its peak for max investment return. I have my sources just from Yahoo Finance, our textbook, and the Carnival Corporation website. Thank you so much for watching my presentation. Let me see if I can find my way back here and stop the recording.